Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for March 30th, 2023. We'll start, as usual, with the swing trade portfolio. So let me get Alcoa up there first, sorry. So these are all on 30-minute bars. Yeah. So yesterday, now I closed a lot of the positions today. The two that I was really interested in managing a lot were Intel and Mexico. They had large positions, so those worked out in our favor. So Alcoa, we started 3 days ago. Yesterday, made the decision here to hold it one more day. It gapped up, peaked, and then as it started coming down, I took the exit here. So in my view, the extra gain for the intuition was that little bit of plus. So that felt good. Caterpillar was another one decided to hold here yesterday. It gapped to here. It slowly decayed to here. And since we had this move, and it was plus 1, 2, 3, I thought that was good enough because it failed right where it stalled before, or not really failed, but stalling. So it was near the 5 and 10-day high. So that felt like a very good exit. I was full and I pushed back from the table. Cliff Natural Resources. The entry was here 1, 2, 3 days ago. We endured this little bit of volatility and gap. Yesterday decided to hold it here to see if there was one more day in it. There was. But Alcoa and U.S. Steel were both stalling, and this was near that resistance zone, and I felt like we had 1, 2, 3 in hand, and I felt like banking plus 3. Chevron. So let's see. Yesterday we took this short and scratched it basically. Today it gapped up, sold off, but then it found support where yesterday it had found resistance. And my spider sense was that there was room for this to get to here. So there's 1, 2, 3, 4. There's a potential 5 on that one, and I like it. So this gave me some courage. So we initiated the position. It's about 1 hour in hand at the close. Keep this one in mind. We're going to come back and visit Dish Network again. It's the only one in the S&P 500 that hits a Godzilla on the daily chart. This is what the 30-minute chart on it looks like. And I'm liking what I see. I think there's room for that one tomorrow, but we're going to come back and look at Dish. So this is Devon Energy. And 2 days ago, we took this trade. Then we didn't get the gap up. And then yesterday it was just static. We didn't trade it. Today it was static and didn't trade it. So the net of this decision was to miss that piece. So we didn't get that piece. On the other hand, was able to close plus 3 on that 2-day trade. So I didn't get that one. That's one of the costs of the intuitive exit. I'm more than happy to be out of the trade here with plus 3, wishing I was in, than having stayed in that thing and it gaps down here and wishing I was out. I would rather be outside the trade wishing I was in than inside the trade wishing I was out. Yesterday, held my nose at the close. I'm sorry, right at the open yesterday, and initiated the COTA 2. The COTA 2 entry at the start of the day. It closed well. I decided to hold that. This is on EA. Today it just went sideways. When it came back and hit the PSAR, I decided to take that exit today intraday because it was stalling right where it stalled once, twice, three times. And I felt like, you know what? We got 2R out of that one, and that feels pretty good. I wanted this thing to have broken through. I would have held it, but the fact that it's stalling, it feels full where it was before, that's enough to influence that decision. So we'll get out at +2 and live with it. Emerging markets. This is one where 2 days ago, after a successful short and then a recovery, then a gap, it gapped up and continued to go. We entered with a standard risk. We held it through 1 day, 2 days. This was one that was stalling, but I liked it. Decided that was going to be the one I was going to hold overnight. Today it gapped up to here, and then it closed very, I say strongly, inside this tight congestion zone and showed no signs of weakness whatsoever. So I decide to hold that one. We're holding 1, 2, +3, and that's one that I am speculating on will continue, and therefore I'm going to put my stop here. I'm going to lock in today's low and lock in 2, as long as it doesn't gap below there, in which I'll just eat it. But that's one where I'm happy to go. Then my intention tomorrow is on a short-term basis that if it breaks above this 10-day high, which it made today, I'll look to add another position. So I like emerging markets right now on the rotation out of the U.S. into that. Ethereum, nothing. You can't short that one. It's a note, not a ETF. But that is in a posture that closed very well in a Kata 2. It's a Kata 2 shape right here. So if this holds, then this feels like a nice little zero state, and I could play this with a mechanical entry around 8.2, and then my target would be, I'd be looking to get to the top of the dragon at 8.4, top of the RL10 at 8.5, 30-day high at 8.6.5. So I like all of those. I would play that as one single position. I would look to add a position above 8.6. So I like that one. Mexico, this was the beauty. So let's see, 1, 2, 3, 4 days ago, we initiated the Kata 2. That's worth listening to. It closed well on day 1. Day 2, we held it. Day 3, it gapped up and continued to go and closed well, so we held that. The next day, it gapped up and continued to go. We held it here. So yesterday, I made the decision at that location, near to the, it made a 10-day high today, but it closed at a 10-day high yesterday. So I elected to hold 3 positions. This was +13 yesterday at the close, and it basically gave us, on this size of risk, another +1 times 3 positions. So this one we exited today at +16. That feels like the perfect trade for me. This was leg 1, slight pause. Leg 2, slight pause. Leg 3, and I'll take that at 16. Now, am I going to come back to that thing tomorrow? You betcha. On a daily basis, this is right near that. This is a fireworks. This is the 150-day look back. And you can see here's the 150-day, 30-day, and 10-day high. Here's the 5-day high. And it's right in the top portion of that. And it's had nothing but caught a twos all the way up. But this is a nice consolidation area right in here. It's tried once, twice, and now this is the third time to try to break out of that. So I don't know, but the last two times it didn't. So when I'm holding 16R on that one, that feels pretty good. I feel like I got everything out of the channel that was there. And if it breaks above, call that 60 and a half, I'm back in on two positions, but I'm not going to give any of that back. So I like this longer term. EWW for the win. That's like my number one buddy right now. So that's the connection between the daily chart and the 30-minute chart. That's like the next higher. You've seen me before work from the 3-minute chart to the 30. That's from the 30 to the daily. And if you think about it, that's each one is a factor of 10. You take 3 minutes times 10, you get to 30 minutes. You take a 30-minute bar times 10, it gets you to 300 minutes. That's almost a full day. So the fractal relationship between 3-minute times 10 to the 30-minute times 10 to 300-minute, it's almost a daily chart. A daily chart would be about 420, but it feels approximately correct in terms of scale. So that's EWW, and like I said, for me that was a perfect trade in the way that it unfolded. All right, next one up is Brazil. So that's EWW's running buddy in the Western Hemisphere here, and we've enjoyed a nice short, and then a COTA 2 micro gain, and then it gapped, and because it gapped above all this chop, we were willing to get in with a tight risk box, and it closed day one pretty well. Day two it suffered, but then closed well. Day three, and we held it here because of that recovery, white knuckling it the whole way. Day three, gapped up, sold, maintained, and I just felt like there were two times that I probably should have sold and didn't, and then it gave it back to me, and I just said, all right, I get it. You're trying to do me a favor, and so I took that exit there, and that gives us, it felt like, let's see, 1, 2, 3, 4, 5, 6, plus 6 on a single position, and I felt like I was rewarded for my incompetence, and so I'll just ask for forgiveness and cash 6. This one does not have as strong a position as its buddy Mexico. So if we look at the 150-day high up here, and let me find the 150-day low if we can. Yeah, so here's the 150-day low down here, and so Mexico just made it to here, and it's kind of stuck right in the middle of this. EWW, you recall, was already up pushing its 150-day high. So all other things being equal, EWW is better than EWZ in terms of trade location, but EWZ has longer to go for value players, and value players might simply be looking to say, you know what, here's where it wants to get to, and there's still this much room, fine. But remember, EWW is up here saying, if it doesn't break out of its 150-day, it's going to fail. That's why we get out of a 16R trade up there. This one, I made 6 in here, and all that did was find the top end of this channel. So let's take a little closer look at that. If we were to draw by hand this regression line channel, it would look something like that. And so out of this move from here to here, we got +6, and here was a 1-day bump out of that channel. That's a signal that maybe this channel is over, and if it is, maybe this is going to try to go to here. I'm open to that possibility. So what I wanted to do was clear the deck. I wanted to cleanse my palette. I made 6R inside this channel. I'm free and clear. I have no overnight risk. Now all I got to do is look at this as a fresh event and say, let me put a tight risk box on there of about 30 cents. Now, and call that the zero state. And if this thing continues tomorrow, 4, 5, 6, 7, it's got 7R to the top of this. It's got 2R or 3R just to this. So I can buy that tomorrow with a clear conscience, aiming for 3 and possibly 7. But I'm also prepared, since I don't have any emotional connection to it anymore, I'm also ready on the downside for it to get back into this channel. To get back into this channel, it might hit the top of the channel, the middle of the channel, and the bottom of the channel. So there's 1, 2, 3, 4, 5, 6. So now I can estimate a reasonable 6R move to the downside. So I like the exit, which helps me clear the emotional deck, to treat this as a new critical state. I now have a strong possible move in either direction with the minimum amount of risk to give up for that, and I can just follow price without any emotional attachment. That is one way to discharge all of the emotions of that trade, is just to get out of it. I didn't want to continue to grapple with it. So that's EWZ. Check or hold? No, the fractal relationship is times 10 or times 3. If you take a look at, this is for Greg's question, when I do the 10, 30, 90, 270 regression lines, the fractal factor is times 3 in each case. The 3, 30, 300 is times 10. And things are either times 3 or times 10. Straight planning factors. On the 3 times planning factor, it's based on the idea that if the signal got me into this move and I divided that into 3, I can give up the first third and the last third and just capture the fat third in the middle. So here's the logic behind that. The 10 period and the 30 period are both moving down, right? I should put it, the 10 period leads the way because it's faster. Price is sold off. And then it has 10 bars in a row of very good price action. So the 10, all 10 are up, and then the last 10 of the 30 are down. So 1/3 of 30 is 10. So when it converts to the top, so the fast one is 3 times the slow one. And what that lets me do is try to get the middle third out of that nice move. Now, if I can improve my entry and my exit, I might get the middle third plus a little taste, and then I can start nibbling on the corners. So the fractal factor of 3 is just a standard planning factor that I use. In the military, if we have 3 units in our combat force and we don't know where the enemy is, we put 1 unit out as the scout, and then we have 2 units as the main body, so we're willing to use 1/3 of the force to discover what's going on, and then 2/3 for the decisive fight. So the 1-to-3 ratio is just a natural frame of mind for me, and I've never had reason to quarrel with that. And then the 10-to-1 is really just at orders of magnitude. 1 to 10 to 100, that's powers of 10, and that's an order of magnitude difference. And that is like a fresh look at a much higher time frame. This is insignificant noise to a time period 10 times higher, which is insignificant to a period 10 times higher. So the argument for a 3 or a 10 fractal factor is a standard rule of thumb that works very good in rule of thumb engineering and manufacturing. That's the short answer. You know, to be honest, when I started first doing the moving regression lines, I picked 30 as a significant one because you have to have 30 data points for statistical significance. And I just took 1/3 of it and said, well, let me try the 10 and the 30, and it worked, and I'm good. Never changed it. And then that gave me the 3 times planning factor. So I started with the 30 because that is statistical significance. So I took 1/3 of it and made it 10, and then I said, well, that's a 3 factor. Let me try 3 to give me the 90. So now the 10/30, you multiply that by 3, you get the 30/90. So that pair becomes this pair. And then 90 times 3 gives you 270. And now the long-term buy and holders compared to the short-term traders, that's where you get the regression line fractal framework relationship of 2 very distinct populations. Those rules of thumb have guided me pretty well for over 15 years. So that's that. All right, back to the regularly scheduled program here. So 30 minutes. We were on... Brazil. So Brazil was significantly different in terms of location than Mexico. And because I felt like I was supposed to have gotten out of this thing before, I was happy to take the gift and clear the deck. INTC. So Intel, this was the other high priority one you will recall. So if you go back a couple days, you will feel my angst of taking this one near the exit of that day as a COTA 2 and a PSAR flip, and I just held my nose according to the... Remember, my rules are supposed to make me feel terrible when I get in, and I felt terrible taking that entry. So I took it. Now, I was fortunate and got this gap, and then it moved up out of that gap to here, and that cleared the RL10. So this was an emerging dragon, so I felt good taking that second position because I was now 2R in hand on this one. So this entry, at the time I make this entry, we're at +2. So that's also a 2R battle drill that cleared that. Now, the next level I look at is this. You notice how this congestion was reflected in this congestion, and then it broke out, and so I felt good adding a third position quickly. This all closed well at +10, and I held it, and it went to here and started pulling back and came to the PSAR, and I said, you know what, that's just a perfect end to a perfect trade for me. So we got an extra +1 on 3 positions, so that 10 became 13 by holding it 1 extra day and then taking the orderly exit. If I go outside now and look at the daily, this is nice because it's pushing the top of the 150. So this is a popcorn. If this breaks out, it's free and clear until here. And now 36.50, there's plus $4.5 on that one. So tomorrow, with a clear conscience, if this breaks out, I can re-enter in a zero state with one stinking little risk box, and I have 1, 2, 3, 4, 5 to the upside. Good to go. If this starts failing tomorrow, Then I think it comes back into here where it belongs. 1, 2, 3. So I've got +5 to the upside, +3 to the downside, and I have no emotional commitment to this trade at all. I can just bank 13 and start the day absolutely clean slate. And that's how I discharge the accumulated electrical nervous energy that by getting too close to the trade and worrying about it so much like I did yesterday. Check or hold? I'm not saying you got to do it this way. I'm just trying to describe what I'm doing. Next one up is IP. So this is one that, again, I would rather be outside wishing I was in than inside wishing I was out. So at various times on this trade, like here and in here, I wish I was in. And then today it felt like it peaked near the previous resistance. So I just didn't get that one because I was attending to other things. That's fine. And now I can look at this with a fresh mind and say that feels like the zero state, and I would be willing tomorrow to get short instantly on a breakdown. The upside is not as clear because if I were to get long here, there's really only one R to the resistance. It has to get above this price level. I don't really like the long side on that one at all. So I'm much more prepared to take this one. That one would have to be my best idea tomorrow to get into that one. I think there's a lot better ideas, but the short side feels compelling. IYR is almost the same chart. Again, I wish, I'm wishing that in this whole period I was in, but I've felt that way before. This one closes with a nice tight compression, range compression in here. And now to the upside, there's 2R up into here, and then the downside gets to here, here, then here, and so there's about 6R of continuous fail. So that's one that I can take without any hesitation tomorrow in either direction. So IYR is on my list. KRE, this is the regional banks. And all of this was the gyrations because of the bank meltdown, but you'll notice that it is kind of compressed. Oops. It has compressed into here. So today all I did was, after the gap up and it rolled over, I took the short, tight risk box, stuck around long enough to make about 0.5, and then got out. Because it was not a decisive meltdown. This was a stable support level, and now it feels like it's setting up some kind of choppiness. So I'll just take 0.5 on the gift, no overnight risk, and I'll be ready to go in either direction. But I didn't want to carry any overnight risk. Marijuana. This one we closed yesterday. And then today all it did was sell off and recover. So this was kind of a nondescript, kind of a yin-yang day. Not much going on. I could see this one with a tight risk, play intraday to the daily limits, and then look to engage a swing trade from here or from here. So intraday, daily only out of this risk box, and then the swing trade gets initiated on a violation of today's range. Ready to go in either direction. Clean energy. Now this is one where, the intuition was to get out of those 4. So we had 4 positions long and took that one. Couldn't take it anymore. Now the decision to resolve the tension here and wait to see tomorrow meant that today I didn't get this gap up on 4 positions. So on this risk box, a gap up of that size would have been a +1 risk box. So that left 4R on the table by getting out right here. That's the cost of the intuition to exit, which I am perfectly willing to take all day. Like if you told me for the next 100 trades that every time I had this position and I took that exit, I was going to miss 4R, I'd take that all day, every day, because I am in a bird in the hand position. We just moved into bear normal yesterday, so we have been living in sideways, which has rewarded us for taking the bird in the hand. Now, this one was Rivian, and we were short to here, made the decision to stay in, and that gave us the adverse gap here, which took a +1 trade to -2. That was an adverse 3R gap on the decision to stay in. So sometimes you eat a 3R loss, sometimes you avoid a 4R gain. That's what it's like. So I don't dwell on it. I live with the consequences. Now, this one got me out at just a -2R loss. It kept me from staying short and getting murdered there, but I didn't have the willpower or the zero state to turn that into a stop and reverse for the revenge trade, because there was clearly too much emotion. But again, I get to witness that trade wishing I was in, and I'm happy to wish I was in rather than wish I was being in and wishing I was out. This feels like it came back to a natural rest point. Now, because it's cleared all of this and has turned in a really nice move that paused here, I am now going to treat this risk box as the zero state for tomorrow. And what I will do on the 3-minute chart is be ready to trade long from here, intraday, 3-minute charts. And then if it breaks above the daily high, which is also the 10-day high, I will turn it into a swing trade. Similarly, if it breaks down below here, I will day trade it on 3-minute bars to here. And then if it breaks below 14.25, I will turn that into a swing trade and look to get all the way back to here for 1, 2, 3 more R. So that's my plan for Rivian tomorrow. Treasuries. Yesterday's intuition was to cash this and make bank. I did not take the PSAR flip and SSC entry. I waited for today. This is today's entry open. It continued, so I bought it with a standard risk, and it closed pretty well. So we're holding about plus 0.5 on treasuries, which is finding support right where you would expect it to find support. And now this feels like it could do that, just like it did this time. So I'm aiming for 107 on the move from 104. So that's plus 350. The risk box is about 40 cents. So if it gives me that, that's a 4 or 5 to 1. So I like that trade in the early days of treasuries. Tesla. Yesterday, we added the second position on the COTA 2 after the successful SSC. We held our nose. It gapped up and held nicely. And I just said, you know what? I'll take 2 on the first one, 1 on the second one, so a total of plus 3. It's still trapped, in my view, inside this channel. And I'm ready to re-enter tomorrow if it breaks out above this. I will add a position if it breaks above there, but I wanted to be in the zero state with a nice plus 3 win on Tesla. And then last one, but not least, U.S. Steel. Just like the other metals, it was the same logic today. We had started a couple days ago with a COTA 2 entry. Endured all of this angst. Today, it gapped to here and then started selling off, and it was stalling right where it stalled before, and I don't want to eat that. So I was happy to take the exit here and cash plus 2. So now I've reduced almost all of my open positions to just a couple overnighters, and I've accumulated that capital. I will be able to go into the market tomorrow with a clean slate, a couple things to manage, and no overnight risk. Optimal mindset for a Friday daily trade. Check or hold? All right, shifting to the intraday trade, sniper trade of the day. We are now looking at 3-minute charts. This is Alcoa. This was yesterday's close. Here was that gap up. Here was the 3-minute bar high, the 3-minute bar low. That sets up the OR3 range where I'm prepared to go long or short with a standard risk box of some size. Check or hold? In this case, the standard risk box is less than the OR3 opening range. As you can see, we got the opening. Well, I should clean that up, right? So we got the opening because the OR3 was here, and then it resolved to the upside, and then the size of the risk box is only that big. It gives me a nice run up, comes back and holds, and now is right here. So now my exit is still right here. The second time that it ran up, I can say one run up and it holds, second run up and it holds. This time it comes back right to the edge of the dragon, and I feel like I've got a little more than 1 hour, so I'm about 1.5 in hand. I'm in the opening 30 minutes of the day. Check, ring the bell, get paid 1.5. Back in the zero state. Check or hold? I thought very hard about front running the COTA 2, but it did not violate the PSAR with price. The RL10 has just come through the dragon, is starting to stall. The RL10 rolls over before it hits the PSAR, turns from spring to winter. So instead of long, I'm now short. COTA 2 to the downside, and combined with a collapsing dragon style. Now my target would be the open and the low of the day, and then close the gap. So there's about 3 targets to the downside against 1 standard unit of risk. Check or hold? So that feels like 1, 2, 3, 4 down to yesterday's close. But if it stalled right here, I'd be happy with 2R. Check or hold? Standard exit. Oops. Sorry about that. So this was on 1 unit of risk. 1, 2. So about +2. Now it's holding support right near the open. So that feels like an SSC, standard risk. I'm looking for it to get back to here. If it gets above this line, then it becomes very interesting. So this is just the tactical space between my entry and where it's obviously making strong moves. All I've got to do in the tactical space, my only objective, is to get my risk out and then above my entry so that I can lock in this much gain. If I can do that, then all of my anxiety is gone because I've achieved no lose plus dinner for two, and then whatever happens in here happens. And then if it gets above here, I can think about turning this into a big trade. That's all I need to do in the tactical space, is survive the initial contact and get my risk out. I end up taking about a half an hour loss. I stop and reverse because it's had a high, a lower high, another lower high. That feels like a kata 2, and now it feels like this is the dominant trend. So I eat the half an hour loss, and then I stop and reverse from here. Check or hold. I lose a fraction. I stop and reverse. The whole market has become quiet and sideways. I just eat it for a fractional loss at the end of the day. And across the whole board, most everything was doing this. Weakness and backing and filling and nothing. So this was plus 1.5. This one was plus 2. This is minus a half. That's minus a half. So that makes this about a 2.5 day. And that's the sniper trade of the day. Let's see here. Let's get to the... All right, so Tim is working CRM. Let's see where we're at here. So here's the U.S. opening. He sees this, and then it starts rolling over, so he takes it short. Immediate a 1R. Now, here's what I'm going to say, Tim. If you take that one short, I want you looking at for the 1R up here at the PSAR, make that the risk box. That would make this a minus 0.5, and that will help your psychology tremendously, especially in that open. Then we wouldn't have any negative valence. Now look at this. You've got all of this is really just noise inside the dragon. That's why I think you want to set that as your 1R loss, so you get a decisive move out of this chop to really confirm that it's not doing that. So if you only take that as a 0.5 loss, I believe you could then take that PSAR flip according to the rules, just like you're supposed to, because it's a PSAR flip above the VWAP and a rising dragon, and then you get this trade and you exit when the R10 crosses the baby dragon, and then you cash that. And then again, you would come down to the PSAR flip for your standard risk, and then that would give you a minus 0.5, and this would be a plus 1. Then you could take this short, and when it doesn't work, you get out of that with a fractional. So you turn this, instead of a minus 2 day, into about a plus 0.5 day. So use the PSAR flip for guidance. Intel. Now, I know your risk box is too small because I see 1, 2, 3, 4, 5 trades that scratch out to nothing when the PSAR indicator is all one smooth thing. And so now there's not much room in that, but a single entry on this one with that size box, you'd end up probably getting a fractional win. So I think wider stops and relax more, and you'd be fine. This is a nice recovery. I would like to see the reentry here where it crosses the VWAP instead of here, although that's still good. This one was poised to fail big. It just didn't. And so you cut it like you're supposed to. And then this one, I think you just wanted to get paid, and it was getting towards the end of the day for you. Otherwise, there's no reason to get out of that and let it drift a little more. But yeah, SPY was choppy. This was a tough day. Woj in Devon gets a scratch, and it never gets out of the chop. So good job staying out of the chop. Lots of chop here in Tesla, but it starts working. You get a fractional. That would be a tough one to get short, but that's the one you want. And a scratch in here. So you got what was available. -1 on, let's see. Yeah, so in a meeting here, so that's not available. I love that short because if this collapses, it's huge. You take the 1 hour loss and eat it, and then you stay out of the chop. That's pretty good. What else was going to happen? That's the best you could get out of that. And then NVIDIA, here's the chop. It breaks out. I like that. Maybe a little slow on the exit. And best entry is here instead of here, but that's not much of a difference. You would get paid a little bit in here. I like that long because you're trying to break out above, and it's a quick exit, good short, and you got what was kind of available. With where you were today, when I see that kind of excursion and it holds near the low of the day, I might have just tried on a money management exit to capture more of that. I'd like to see, at a minimum, I'd like to see out here instead of here. That would make today a marginally improved day. I think that's everything we got from the traders. We'll shift to the report. So here's the marked up S&P 30-minute. All the little COTA 2 signals of improvements in the market. It's trying hard. The market is in a COTA 2 and struggling to get out and run. Good dog, K9. Good job. That's our buddy from Doctor Who, for those of you that don't know him. Market conditions, sideways, bullish normal, excuse me. This is a big improvement over last week this time. The risk Z is in our favor. It just tipped over into risk on. That's good. I just want to run quickly to the auto framer standard numbers. So this is the only Godzilla. Remember, there were none yesterday. Dish became a Godzilla today because it's in this condition. And it's a quiet Godzilla. Here he is. Here's the 150-day high. 150-day low. 30-day high. 30-day low. 10-day high. 10-day low. And here's today's price action. So there's room for a nice recovery. Like, it has to get through this first. So here's the first leg up. Second leg up. Third leg up to get back to the 150. But if this fails and breaks this, then it feels like whatever drove it down there, there's more of that coming. So this is what a Godzilla setup gives you. What's nice is that it's a quiet Godzilla. The 5-day and 1-day volatility has stabilized, which makes you want to believe, for sake of hypothesis, that it is stabilizing with declining volatility right here. That makes it feel like a bottom in much the same way that this became a local bottom and gave that. This one has a Godzilla possibility of stabilizing and slowly grinding or big failing. Either move is going to be large compared to the size of the risk. So that's what a Godzilla is going to set you up for. Standard. In the push to a new 10-day high today means that there's very few symbols very few symbols that test out better than 2 to 1. Here's the 2 to 1 test line. Like, for instance, only Coinbase, VIX, Treasuries, and Squarespace are better than 2 to 1 on the risk reward for the auto framer. There's Tesla. Now, here's our metals: Cliff, Alcoa, U.S. Steel. So Cliff is the only one that's even close to a setup. The semiconductors, NVIDIA, Texas Instruments, and Intel. Intel was fully valued. That was a good reason enough for me to get out of it. I didn't have much more that I could expect. And then here's our market at a 10-day high. So all of these up here have better reward to risk ratios than the market, and all of these have more relative strength than the market. So that's how you read that. Very few things that are set up in the auto framer condition. With the gains that it's made by moving back into bullish normal, you see a lot of summer, a lot of things that are above the Red River, no winter whatsoever, and so things like McDonald's, Coke, Nike, Procter, there's our buddy Intel. And then in our tactical symbol set, none of them had large one-day moves today. In fact, the whole stack was mostly quiet, with the exception of Bitcoin and biotech. And there's only residual volatility, like the memory of volatility in those four, which is our buddies, Mexico, Intel. That was volatility that was in our favor, but they both got quiet today. That's why it felt like a good time to get out, because the run just might be done. We'll see tomorrow. We'll see how much I regret I get to experience at the open, which that happens every day. So just expect it. The NDX summary gives you a pretty clear indication of how good it was all over the place, except for Ethereum, which is taking a nice pause after yesterday's 10%. Here's some nice gains, right? So what you do is you look for the things that were better longer. So those 4 and 5 jump out at me. So that's Mexico, tech, staples, and silver. So tech, and that's subset Intel and Microsoft, tech, and Mexico. One-day orientation for tomorrow. And that's everything we got for today. We'll get this published and processed. And see you tomorrow. Let me stop the recording.